So, world politics are unclear, which is nothing new. What about the world economy, though? You can figure out how healthy it is by looking at things like the stock market, GDP forecasts, or how much people spend. Let's look at the US markets for now. In the last 6 months, Standard & Poor's has gone up by 8%. The Nasdaq is up 14%, while the Dow Jones is up about 3%. Now, these numbers are good, but are we forgetting something? Maybe a market crash is coming. Some investors say that we are. This is Micheal Burry. You might remember him from the 2008 movie, The Big Short. He was the guy who predicted the stock market crash. He made about $100 million for himself, and his partners made about $700 million. So, he knows how the market works, and now he has made another bet that is worth about $16 billion. Again, it's going against the flow. Micheal Burry is putting his money on the stock market going down. In the last quarter, he put in the order. It makes up about 93% of his stock, so it's clear that he's confident in it, and he's not the only one. Warren Buffett is doing the same thing. He's one of the world's biggest businessmen. In the last quarter, his company sold shares worth $8 billion. Does that seem like a lot? Well, not really, but time is important once again. Stocks in the United States should be going up, inflation is going down, so the economy should be booming. But these top investors don't think so. They think the market will crash. Have they seen something we haven't seen yet? Well, the US isn't out of the woods yet. There are still a few things that could bring it down. China is, of course, number one. Everything that Beijing reports looks bad. Consumer spending, workplace output, exports, and investments in fixed assets. The numbers for China don't look good, and this could have an effect on the US. Their Treasury Chief, Janet Yellen, said that was true, but she added that Asian countries will be hurt more. The second thing is American banks. Several small US banks, like the First Republic in Silicon Valley, have already failed. But the problem isn't over yet. Moody's has already downgraded 10 American banks. Another service, Fitch, is saying the same thing. They say that scores could go down for dozens of US banks. We're talking about the big ones like JP Morgan Chase, Bank of America, and Citibank. If they are lowered, it will have a big effect. In fact, things are already going down. In the last 5 days, JP Morgan's shares have dropped by 27%. Citibank's stock is down 4%, and Bank of America's stock is down around 56%. This shows how important these credit scores are. Before putting their money into something, investors look at these scores. The higher the rating, the better the investment. A downgrade is bad news because it means the rating has gone down. But that doesn't mean the markets are going to crash. Unfortunately, it's not that easy. The business of the United States is going through a strange time. There's really no other way to say it. Since March of last year, when they did it for the first time, the Federal Reserve has raised interest rates 10 times. The interest rate on loans is 5% higher than it was last year, which is a big jump. In an ideal world, this would have slowed down the economy through higher unemployment, a smaller GDP, and less spending by consumers. But what is happening is the opposite. This quarter, experts think that the US GDP will grow by 5.8%. It's twice as much as it was a month ago. The unemployment rate has gone down to 3.5%. In the last quarter, the US economy added 180,000 jobs, and spending is also up. Last month, sales at stores went up by 0.7%. At the same time, inflation is going down. It was 9% last year, but it's only 3% now. So, what is actually going on? How is the economy not shrinking if inflation is going down? I'll explain what BlackRock is saying. It is the biggest trading firm in the world, taking care of assets worth about $8 trillion. All of this, says BlackRock, is only temporary. The US economy won't grow or shrink for the rest of this year. It will just stay the same. But next year, it could go through a time when there are enough jobs for everyone. How does that make sense? Well, there are three main things: slow economic growth, rising prices, and a lack of workers. The US economy could be like these three things next year. It's better than a recession, but it also means that the economy doesn't grow. I want to stress that each of these is a different estimate. Each economist has a different opinion about business in the US. Some business leaders say stagnation is great, while others say it's terrible. Why do you ask? Because we are in a place no one has been before. Remember what we said about the Wuhan virus and how its long-term effects can't be predicted, only felt? It's the same with business. The organization of the world economy changed because of the pandemic, both for better and for worse. Just wait and see.